Let's talk about a $150,000 waste tactic. How do you get a business line of credit for bad credit with a business loss? Let's talk about that. Let me give you the overview here. See, the whole thing is if you have bad credit and your business is currently showing losses, one loss or two losses, consecutive losses, you got to first be aware of your repayment obligations. Because the whole thing is if you're trying to get a business line of credit, especially up to $150,000, and you have no cash inflows to sort of back up your claim to repay the loan, you have to be aware of your repayment obligation. What am I trying to say here? When we talk about business line of credit, you have three types of lenders you can talk to. You have regular banks, right? Banks or credit unions. That's option number one. You have alternative lenders such as Kalamata Group or Balboa Capital. Those are alternative lenders. That's option number two. And option number three, you have online lenders. So you have your Blue Vine of the world. You have your On Deck, and you have your American Express business line of credit. The thing is that all of those players, they actually have different criteria when it comes to repayment obligations. So you got to be really clear about your repayment obligations. So when we talk about your repayment obligation, an important criteria that I want to mention here is cash flow. Yes, right now your business has losses. Okay, but what about your cash flows? Because a business loss is an accounting I would say an accounting concept. But cash flow is cash. I mean, cash is cash. What I'm trying to say here is that you can have a loss and still be positive when it comes to cash flows, and vice versa. You can have a lot of revenue coming in, but you are poor when it comes to cash. So you need to understand what the lender is expecting you to have in terms of cash flow, in terms of repayment. Some lenders will say, listen, we want you to really pay interest during the draw period, and you pay us everything at the end of the repayment period. During the repayment period, some lenders will say, listen, we want you to pay 5% during the draw period, and you pay us the rest during the repayment period. Some lenders will say, listen, don't pay us anything. You pay us everything during the repayment period. So it's totally flexible. Very important to be aware of your repayment obligations. By the way, boss, welcome back to the show. It's really a pleasure to have you here to have this quick convo with you about a business line of credit for bad credit with business loss. How do you get it? Now, let me give you a few pro tips here. It's important to understand that if you have no money, if you have a business with no money, you have 4 financing options, and a business line of credit is just one. So before you think about getting a business line of credit, for bad credit with a business loss, think about the options first. So the first option is you can try to get a business loan, because the whole thing is that if a business line of credit for bad credit with a business loss is complicated, trying to get a business loan for bad credit with business loss. And sometimes you might actually be lucky. Why? Because if you're trying to do equipment financing, for example, you could actually be very lucky, because the lender will look at your situation, will look at your company's situation and say, listen, even though you were having a loss, or you had a series of losses, and your personal credit and business credit for that matter are all in the red, we're still okay anyway, because as long as the business loan is collateralized, we are willing to take that risk. So you might find it a lot easier to actually have business loans, especially what we call asset-based business loans. For example, revenue financing, equipment financing, merchant cash advances, all those asset-based revenue arrangements, those could actually be very helpful to you when it comes to getting business loans. So this is a possibility, okay? This is one financing options if your business has bad credit and no money. In other words, you have losses, okay? So think about that. Think first about asset-based financing. And so anything that allows you to use your assets or your revenue items as a collateral, this is a great opportunity for you. This will also help you actually get approved fast. And what you want to do here is that you want to, because when you have losses, when you have no money, your first priority will be to get cash injected into the business, because you need cash to actually operate. You need cash to actually expand. You need cash to hire more staff. You need cash to implement your strategy, right? So your first order of business should be to get cash and try those asset-based financing arrangements first. Boss, I want to quickly remind you of today's topic. We're having a conversation about how do you get a business line of credit for bad credit with business loss. We're speaking about a smart plan of $150,000 maximum. The second thing is that, besides a business loan, you could try to have a business credit card. I mean, if you currently have a business credit card, just find ways to use the business credit card for all kinds of expenses without actually tapping into cash. What I'm trying to say here is that especially if you have a business credit card with the consequential limits, you can use it. You can use it for a lot of things. In some cases, you can even pay vendors with business credit cards. There are a lot of vendors who will gladly accept your business credit card payments instead of having a check or a wire transfer. So think about that. So your ability to tap into the business credit card limit that you have, it has to be met with your ability to repay the whatever you charge on the card. Because otherwise, your CUR will go up, your credit utilization ratio will go up. If your utilization ratio goes up, that means what? That means a lot of negative consequences for your personal credit score, but also your business credit score. Okay, because the thing is that if you tap into the limit on your credit card, you must be able to at least pay the full balance or pay a consequential balance so that you can bring down your CUR. And one thing I want to say also is that when we talk about business credit card, make sure again that you charge on the card only expenses that can help you out. In other words, if you have a travel rewards credit card, charge travel related expenses on the card. That way, you are not only you can actually gain some rewards, some perks, but also have the ability to use the card and to use the card responsibly. And another thing I want to say here is that when we talk about others, I want to give you other sources of financing. So besides business loans and business credit cards, you also have equipment financing that I spoke about before. And equipment financing works in a very fantastic way. Equipment financing is a collateralized type of business funding. So you are able to get it with no problem. Because again, the lender doesn't care, that the lender knows that everything is fine. Because if you happen not to pay the loan, they just have to repo the equipment. So you have like your approval odds are high. If you are currently listening to me right now and you are trying to get, let's say you want to get a business line of credit for bad credit with business loss, you could try crowdfunding. The thing is that, I know this is a less traditional way to raise money, but crowdfunding has become a popular source of business funding. You'll be really surprised. You're really, really surprised. A lot of folks are using it, including some of our business clients. People are using it satisfactorily. So you can raise funds as long as you're able to articulate your case about your business in a very clear way, in a very interesting way. And the cool thing is the crowd, quote unquote crowd, doesn't care about your credit score. Okay. Now here is how things work. Let's say you choose a platform like Kickstarter or WeFunder, and you create a post describing your products or service. Then what will happen here is that you choose a goal amount and create tiered rewards for contributors based on the size of their donations, like early access to the product, special features, or merchandise. Obviously, this whole crowdfunding thing has to match the business you're in, right? Because some business models are not really they don't fit with the crowdfunding model. But hey, listen, you have to see what really works for you. One thing I need to say here is that the downside to crowdfunding is that you usually have to reach your fundraising goal to receive any amount of money. If you don't reach the goal, most platforms will refund the donors and you won't get anything. So, however, the advantage of crowdfunding is that the money you raise is purely donations, meaning you're not required to repay to the donors. So this is kind of cool. Now, based on our analysis, crowdfunding is also less expensive than other forms of financing. So instead of paying interest to a bank, you pay a percentage of the amount you raise, typically ranging from 3% to 5%. So if your campaign is unsuccessful, fees are not applied. So, this is kind of cool. One thing I need to say though, is that crowdfunding is not a guaranteed way to raise money. And so, research shows that only 23 to 30% of all crowdfunding projects are successful. So this is something you have to that's why I was just telling you earlier that it has to be in sync with the business model you have, with the industry you're in. So technology, games, and design projects are the most popular categories. So if your business doesn't fit in one of those categories, you may have less luck with crowdfunding. But hey, listen, it's all about your ability to be creative. It's all about your ability to be innovative. It's all about your ability to convince people to actually embrace your business model. So if you can do that, if you can do a great job at that, you are good to go. Boss, I want to remind you of today's topic. We're having a conversation about $150,000 power play here. How do you get a business line of credit for a bad credit with business losses? Now, let me give you the steps you want to follow here. If you want to get your business line of credit, you need to first, the first step you want to do here is you want to decide why you need a line of credit in the first place. Remember, you basically are having business losses right now. And the question is, before you even think about getting a business line of credit, what is causing the loss? Is your business model even interesting? Does your business have potential? Can you run your business? Before we speak about getting you extra cash, let's think about the structural problems that could be really undermining your business. Is the business really legit? Is the business viable, right? In other words, in accounting, we say, do you have going concern? This is really important. So you need to decide why you need a line of credit and how much. And so we talk about a maximum power play of $150,000. If you have business losses, it's kind of complicated to get anything above that. It's kind of unless you can do a super duper really good case of telling investors and lenders why your business model is just wonderful. Otherwise, 150K is just the maximum. $250,000, if you're really lucky, you can get that. But 150, that's the maximum. Now, how much do you need? Do you need 75, 63, 82, 12, 23? Talk to me. And the thing here is that, after you evaluate why you need a line of credit and how much, you need to evaluate your qualifications. Because remember, lenders are paying attention to your credentials, to your company's credentials. Remember, you have losses, you have bad credit. Those are two strikes, quote unquote strikes. How do you actually counter those strikes? What are you bringing to the table? Do you have skin in the game? Talk to me about that. Do you have skin in the game? If you have skin in the game, how do you show that you have skin in the game? And first of all, if you're trying to collateralize the line of credit, then investors and lenders know that you have skin in the game. Why? Because you have something to lose. But if you are looking for an unsecured business line of credit and you have business losses and you have bad credit, you don't have skin in the game. And if you don't have skin in the game, the lenders are not going to be willing to approve you. So show some skin in the game. That's really important. Okay. So evaluate your qualifications. So when we talk about business line of credit, you have stuff like your credit score. That's what lenders pay attention to. Your time in business, lenders pay attention to that. Your annual revenue, not the income, because income or loss, that's the bottom line, but your revenue. So top of the line numbers. And the lenders might also pay attention to your economic sector. So the sector in which your business is in right now. And so the next thing you want to do here is that after evaluating your qualifications, you really want to research lenders. If you remember, I started today's conversation by telling you have three types of business lenders for business lines of credit, bad credit with business losses. Believe it or not, a lot of banks and credit unions can actually qualify you if you have the right relationship with them. Yeah. I mean, banks and credit unions, they will take care of you, not a problem at all. But your chances of getting approved are pretty slim. But again, I just want to insist on the fact that you gotta have that relationship. If you do have the relationship, you are good to go. But if you don't have the relationship, what do? You got to go to option two. Option two, you have online lenders. Online lenders are a little complicated too. So when we talk about OnDeck, when we talk about Cabbage American Express, when we talk about Bluevine, when we talk about those players, they could actually look at your case and say, you're having losses. We don't think we can actually work with you. So that goes to option number 3. So option number 3, that's where you have more luck in our view when it comes to scoring a $150,000 maximum business line of credit for bad credit with the business loss. So online lenders, no. Traditional lenders, no. Alternative lenders, yeah. So when we talk about alternative lenders, we are actually putting that category loan marketplaces as well. So loan marketplaces such as Lendio, such as NBC, National Business Capital, such as SmartBiz, those players will work with you, and so you stand a chance to actually be approved. Not a problem. So what you want to do here is that you want to see what really works for you, which lender will work for you, and most importantly, you want to pay attention to the repayment window. Because even though we're having a business line of credit, you also have a repayment window as well as the other terms and conditions. So pay attention to those elements to make sure that your cash inflows and cash outflows match that repayment window. Because remember, even though you have a loss right now, or you have had a series of losses, you still are having some cash coming in, right? The only thing is the cash coming in is not as big as the cash going out. That's why you're having losses. But so you have to find a way to restrike a positive balance here to make sure that you actually go in the black again. You become profitable again. And so it's important therefore that you pay attention to the repayment window. Very important. The next thing you want to do here is you want to gather required documents. So remember, we are speaking about how to get a business line of credit for bad credit with business losses. So the thing is that when we talk about required documents, you are going to have to document your losses. You are going to have to show your P&L, your profit and loss. You are going to have to show your balance sheet. You are going to have to show your company's cash flow statements. You are going to have to show your company's owner's equity statement. What am I trying to say here? You are going to have to contextualize the losses. Like, lenders want to see what is causing those losses. Lenders will want to see how those losses are affecting your other company's financial statements. So this is why you want to actually give a complete set of financial statements, so that lenders have a clear idea. They have a bird's eye view of your data. So what I'm trying to say also is that when we talk about gathering business documents, gathering required documents. We're also talking about your business tax returns. So you might have to provide your 1065 or 1120S or 1120. So again, so the lenders can actually trace the accounting losses to your tax losses and see how those losses are affecting your overall financial situation. Because remember, when we talk about a business line of credit for bad credit with business loss, the lender is worried about repayment, right? So the lender wants to make sure that your financial situation personally and business-wise are in top shape, or at least on the personal side, things are not really that bad. I mean, things could be bad on the business side, but on the personal side, the lender wants to make sure that you are good to go, or at least they are good to go with you. And so you want to provide your tax returns. You might have to provide also your bank statements, okay? And you might have, in some cases, you might have to provide also official documents about your company. So things like certificate of good standing, things like a registered agent service. You might have to provide your articles of incorporation or articles of organization. So you're going to have to provide a constellation of documents to the lender, so the lender has a clear idea that your business line of credit for bad credit application is really legit, is really serious. And the last thing you do here is just apply. So once you have all the documentation ready, just apply. And you can apply online. You can apply via email. You can apply at a branch if you go to a bank or credit union, or you can apply over the phone. So you have a lot of options here. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about a $150,000 power play, and we're speaking about a business line of credit for bad credit with business loss. How do you get that? How do you actually get the loan that you need? So I spoke to you about, let me quickly give you a recap here. I give you the overview, give you a few pro tips here, And I also explained to you the steps you need to follow if you want to get that business line of credit. Thank you so much for your attention. I really appreciate it. God bless you. I will see you next time. But until then, remember, stay marvelous.